Alright, we're live. It's currently 3:27 a.m. Went to bed at like, I don't know, 9. Woke up at midnight, posted a video, and I couldn't go to sleep. It was like 2 a.m. I'm like, fuck it. You know what? I'm gonna just wake up now and start my day and see what happens, because I'm not gonna wake up late as fuck at 9 a.m. or some shit because I couldn't fall asleep, and this is gonna be a new sleep schedule, I guess. But fuck it, let's get into the video and see if we can hop on the charts. I want to get on at market open today and see if I could catch something. Hopefully this fair value gap could be paired with the liquidity sweep and the break of structure, and that's three things that will confirm a trade. I'll have like pretty solid confirmation.
All right, this is
Fuck. Of course, this fucking mic's not working. Hold up. Fuck ass headphones, bro. Fuck wireless headphones. I gotta get rid of these fucking things because my brain's probably getting radiated to death.
attempt number 2 to make this video. We are currently in Miami right now, and I recorded this out on the balcony, but my computer overheated, so this is going to be take 2 and probably a sloppier version of it. But what's good, Jits? Welcome to fucking boot camp day, I don't even know, 16 or 15, maybe 4. I have no clue what day it is.
Isn't it just me or this audio geeking?
But yeah, we're in this shit. I think we tapped at what, like we've tapped 2 weeks now, right? But anyways, today we're talking about fair value gaps, liquidity voids, imbalances, whatever you guys want to call them in the market. And most of the time we would do this on like a little chart, but as you guys know how we've been setting like this whole shit up for this boot camp, I'm pretty much going to split up all those little building blocks into 3 separate videos, just so you guys have like a chance to take everything in and like actually properly understand the shit. So today it's literally just going to be one-on-one, me explaining what fair value gaps are, why we want to use them, how we can understand them in the market to, actually be confident in taking a trade based off of it. Because for me, I would much rather, have take a trade based off of actual like market confluence and orders being filled and actually seeing that versus, oh, it bounced off a floor or like it hit a ceiling, so it's going to go down. Like, are we being dead ass about that off of a drawing that you put on a chart? I have no hate towards support and resistance traders. It just doesn't make sense to me why you would, essentially bet on something like that. But I mean, hey, some people make money doing it. This just makes more sense to me. It makes me feel safer about putting money into the market. So with that being said, let's get into fair value gaps. Part fucking 1, boys. So what is a fair value gap? What's a liquidity void? What's an imbalance? It's literally all of those are pretty much the same thing. So I like to call it just a liquidity void. So similar to how we talked about liquidity in those past 3 trading videos, that's where, orders are residing. That's where a market wants to target to take out those orders, to execute those orders at this certain price point. This is quite literally the opposite. This is a void, a price range where there are no contradicting orders. So if we see a big move up, right? Why are we seeing that move up in the first place? Because there's no sell orders through that price range. That's the liquidity void. That's the imbalance. That's the fair value gap. Same thing to the downside, right? If we see a big drop to the downside with no like hesitation and it just dumps, right? That's a liquidity void. That's the imbalance. And why is it a liquidity void? Because there's literally no resting buy orders throughout that massive drop down. If there were resting buy orders, price would go down, pull up a little bit, go down a little bit more. Yes, maybe it's bearish and it still closes bearish, but there's still resting buy orders. So this is what it helps us do. We can actually be able to spot where there is no liquidity on the market. And if we think about this logically, right, when we're within a trend and price obviously moves with higher highs and higher lows, where are those higher lows going to draw to? Where are those retracements going to draw to? Probably into those areas where liquidity was not before, right? And then what's going to happen once we get into those areas, market makers can execute their orders because they know, right, there is a emptiness of liquidity. They know that right when they place their orders within there, market's going to move in their direction. So how is this beneficial to us? How can we, we'll talk about how we can spot it in 2 days on the next trading video, but
Bitcoin to 15K, somebody said, then big buy. Low key, bro, I remember looking at Bitcoin when it was 18 grand and about like $200 worth, but fuck, if I would have put 18 grand, I think that's like, if I sold all my shit, that's all I would have at that time. If I would have bought that one fuck ass Bitcoin at 18 grand, I could have had 120 G's, bro. Maybe on the next run, I don't know, we'll see.
why is this beneficial to us? One, it helps us accurately kind of understand, okay, where does price want to draw to when it's retracing, right? Fair value gaps are used for retracements. I don't use fair value gaps for...
You know what, I should probably do this on here. I want to see what Bitcoin is right now. Just like I have it logged low key. Let's see, what is Bitcoin? What's it at? 66 grand right now, holy fuck. So, what should we do? Date chart. Fucking crazy. When was that point? It was probably sometime in 2020. Yeah, that sounds about right. Was it 2020? Yeah, it was about November 2020, I would say, yeah. That's fucking wild. It fucking hit what? 120 grand. That's wild. Crazy shit.
like entries necessarily. I use liquidity sweeps to understand where market's going, and then I use fair value gaps to kind of like figure out where price maybe wants to draw to, or for like a secondary entry. And we'll go into all of that stuff once we get deeper into strategy. But this is super useful because we see price in an uptrend drawing back down, and we can find a liquidity void, and then we see a reaction off of that, or like a break of structure on a lower time frame. Boom, like why wouldn't you execute that? Because you know there's a lack of orders lying within there, you know the trend is going up, and if you see a break of structure on a smaller time frame after a fair value gap or an imbalance or a liquidity void getting filled on a larger time frame, why wouldn't you enter there? You know, that's literally, you know, you see, okay, price is in this range where there's a lack of liquidity for opposing orders, right? If we're in an uptrend, there's no sell orders laying within here, and then we see a break of market structure on a lower time frame, why wouldn't you execute? Right? Doesn't that make so much sense for you to execute on a trade like that versus, oh, price hit my fucking ceiling? Are we being dead ass right now? Like, let's use our brains, okay? So I mean, with that being said, that literally is what fair value gaps are. It's literally just a lack of orders within the market, and that's what causes the imbalance to be made. The big ass candle, right? You guys are, and we'll talk about how to spot them in 2 days, but when you guys like see them within the market, most of the time it's a big candle down. Why? Because there's literally no orders stopping it from dropping that far down. Same thing with the upside. There's no sell orders within there that's stopping it from pushing so high up. And then when price comes back into that range, right, it gives the market makers to, you know, the opportunity to keep pushing price in the direction that they want to. And again, once we start getting all these pieces, it's like, you know, I'm sure even after this video, you guys will start looking into that even more by just seeing, okay, we got liquidity sweep, break of structure, we see the trend starting to form, and then, okay, now I have a fair value gap, oh, I notice it gets filled, smaller time frame, break of structure, boom, we're in, okay? And it's literally as simple as that. Like that. People really make trading a lot harder than it has to be, and you guys can really fucking simplify it.
Yeah, there you go. There's a three steps, you know. It's gonna be the liquidity sweep, break of structure, and then fair value gap. That's how it's gonna be.
You just say, okay, this is exactly how price moves. You know, what do we use fair value gaps for? Retracements. Cool. When we see a retracement in the market, figure out where the imbalance is, scale down to a lower time frame, find a break of structure, continuation. Boom. Like, come on, like that shit is so easy. And then, you know, liquidity sweeps. Okay, we see liquidity taken out of the market. Okay, we see a break of structure. Perfect. Execute, right? All of these building blocks, I pretty much have this set up so it's like one size fits all, right? You can trade this on any time frame. You can trade this with any fucking pair, right? You can literally apply these concepts to every financial market, because this is how price literally moves. This is how the market moves, and that's why I love the way that I trade, because you can do this on any time frame. If you can't sit on your computer for like 2 hours a day, you know, like scalping or like, you know, actually monitoring it, you can do swing trades where it takes several days to hit. And as we start adding all the building blocks, you start to see like, okay, I can use this, and I don't really understand this, so I don't need it, right? That's the nice thing about this. All of these are pretty much execution like pieces, and it's just like which ones do you want to use. And the more that you know, the better, because then it's like, holy shit, now I have like 5 different confirmations that I can go off of that are all very high confluence and that are all based off of actually like market execution and orders being filled. Who wouldn't want to place a bet on that? That's why I love trading, because I can be like, okay, yeah, I'm actually going to bet on this because I actually believe in this, versus, you know, oh, like I think it's going to go down because it, you know, like hit a ceiling. Just shit don't make no sense. So with that being said, that's fair value gaps explained. We'll talk about how to spot them tomorrow. No homework today. Actually, the only homework you have to do is like do something that's actually productive. Don't sit around. I mean, if you're watching this video, odds are you're doing something productive right now, but do something else after this video. So you watch this video, go take notes, go on a run, go to the gym, do something that's hard, do something that's uncomfortable. Trust, that's where you grow, all right? When you put yourself in uncomfortable situations, that's where the growth begins. And hey man, I'm still trying to, you know, get uncomfortable even while on vacation. We're in Miami right now. I very well could have just said like, yo, the Wi-Fi's ass. I don't want to upload this video, but here I am on vacation making a fucking video and uploading it on ass Wi-Fi. So, and then after this, it's like, cool, now I feel accomplished. I feel okay with myself. Like I feel proud of myself. I got something good done for today, and then I can go have my fun. Like there's a perfect balance of having fun and actual work. Like, and to be able to understand that, like if you're working 24/7, that's why I always say like take one day off. If you're working 24/7, bro, you're going to get burnt out. You need a good balance, but it's also like you can't just say, oh yeah, I want my balance, and then just like not actually work, right? There's you know, you know the difference. But yeah, with that being said, go do something fun, do something productive, and then go do something fun. I'll see you guys tomorrow when we talk more about discipline and how we can, you know, actually start fucking whipping your ass into shape, because we know how fucking terrible you guys are at staying disciplined within these markets. So hopefully we can start talking about some tips, some tricks, some actual exercises for you guys to start practicing to, you know, actually get you in line. So with that being said, I'll see you boys tomorrow. Peace out.
Yeah, so normally I would just watch one video, cut it there. I'm gonna keep going until we get a chart video where we could see and find out what the fuck is this fair value gap, because I really do want to make trades. It's just, you know, these videos are good, the psychology shit, you know, it's important, yeah, but I'm not gonna delay this another day or 2 or 3 just to get to back on the chart, because it seems like bro's on vacation. So I get it, videos are being uploaded, no hate on that, but I'm trying to get this shit rolling, trying to get trades going already, trying to spot this shit in the market, get some market time, because it's fucking 3:41 a.m. right now. I can't sleep. I'm not gonna continue on with my day and do anything else. My goal right now is to trade. So until we get a fair value gap set up and how to find them and how to pair it with the, what's it called, fuck, I can't even remember, with the what's it called, fair value gap. God damn, dude, I can't even fucking remember what I was looking at. That shit's crazy. Liquidity sweep, fair value gap, and the break of structure. Until we could put all those together, I want to have like, find whatever, 10 examples in the market, and I want to try to put that to use today at market open, because it's Monday at 3:42 a.m. So at 8:30 a.m. we're gonna look and see if we could find a trade, because I really want to have a fully like put together trade that's as legit as it gets, you know, or at least this 3 steps.
What's good? Welcome to boot camp day. Who fucking knows? Again in Miami, recording for you guys right before the FX Summit, actually. So I'm gonna be, chilling here for, a little bit, getting ready for my day. All the other guys are out getting coffee. I already did that. First one up. First one up, first one up, last one to bed. After this, man, they ain't waking up as early as me. They ain't staying up as late as me. Anyways, let's get into it. Today we're talking about discipline, and pretty much most of today isn't going to be talking. It's going to be me kind of telling you to do shit, telling you to write down stuff. And it shouldn't be, today really shouldn't take long. It's really about identifying the problems that you know that you have, and then, finding solutions for them. So, with that being said, pull out your fucking notebooks, and if you don't have a notebook already, pull out your notes app, and then go drive to the store and get a notebook. That's part of your homework. Go grab a notebook. If that means you already failed fucking day 2's homework, which was to go get a notebook. Or maybe that was even day 1's homework, to get a fucking notebook. So, we gotta get that fucking covered, okay? So, let's jump right into it, okay? We need to know how to identify our issues. Damn, look at all that frizz. We need to know how to identify our issues and then solve them, because if we can identify them, that's one step in the right direction. But if we can't solve them, or if we can't make an attempt to fix them, then we're fucked, because we'll always have that issue for the rest of our life. Okay, so with that being said, you got your notebooks in front of you. Write down the 3 biggest issues you have with trading. And guess what? I'm going to tell you right now, it has nothing to do with strategy. So if you were going to write down, I can't find order blocks well, shut the fuck up. I'm going to teach you how to do that. Finding order blocks is the easiest shit ever. Let's focus on the hard shit, the discipline shit. Maybe you have trouble with knowing when to stop trading. Maybe you have trouble over leveraging because you risk like 10% of trade instead of 1% because you think that's still sort of risk management and you're losing a lot of money. That's a problem, right? Do something related to risk management, do something related to emotions, do something related to psychology, not a fucking bitch ass strategy, okay? So write down your 3 biggest problems, okay? And now we're going to talk about how we can come down to the fucking root of those problems, okay? And figure it the fuck out. Okay, so let's do that first example that I said. Maybe, it's hard for you to put the phone down. It's hard for you to walk away from trading for the day, especially after you lose for the first time. Okay, so identify the problem. Perfect. We're done. Okay, now figure out a solution. This is the hard part, because it's pretty easy to identify, okay, I have this problem, but I don't know how to solve it. Okay, so hopefully we can figure that out. All right, so we need to find the base of the problem, okay? Why do you place more trades? More trades? More. Why do you place more trades than you're supposed to? Okay, figure out the emotions that play into that. Whether it's greed, do you want more money? Whether it's, being upset that you took a loss, so you're just revenge trading. You have a fear, whether it's, you have a fear of missing out on a trade because you think this is a 1-of-1 trade that'll hit a 1 to 10 risk to reward ratio. It won't. You'll probably lose on it, especially if it's a revenge trade, especially if it's your second trade of the day and you lost your first one. You won't take profit. Just being honest. Okay. Find the base of it. Figure out why. What emotion is causing you to press that button again? You know for a fact that, okay, I'm taking too many trades than I'm supposed to. Why? That is the question that you need to be asking. Why am I doing it? You figure out, okay, well, I'm doing it because I want to make more money. Why do I want to make more money? What emotion is driving that? Go down that pyramid, okay? Identify the problem. Say, why am I doing it? What is my reasoning for executing or doing, actually engaging with that problem? Why do I do that? And then say, okay, what is causing me to feel the need to do that? And then from there, boom, you've identified it. And once you've identified it, That's when we start working on it. So whether the emotions that you've outlined for these 3 things are greed, whether it's overconfidence, you think every single one of your trades is going to hit take profit, and when it doesn't, you get really upset, or you think that it was the market's problem, or you blame it on someone else. Nope, it's not the market's problem. The market's going to move how it moves. The market does not give no fucks about you. It is your fault. Every single mistake, every single issue, every single problem that you have in these markets, every time you lose money in these markets, it's your fault and your fault only. And the sooner you guys can identify that and understand that, the way better off you'll be. You got me? Okay, so hopefully you have your 3 problems written down. And ideally you have, it's problem 1, why do I do this? And then you have problem 2, why do I do this? Problem 3, why do I do this? And then we can have stems going out of that, you know? So the first problem, I trade more than I'm supposed to. I take fucking 5 trades a day, and I say I should only take 1. Why am I doing that? Because I want to make more money. What is driving that thought process? What is causing me to want to make more money? I have no money, get a job. Solution. I have no money, go get a fucking job, work a 9 to 5. No, I'm dead ass. Like, get some fucking money, because having money and trading gives you a sense of security. If you are trading and it's your only source of income and you're not profitable, you are fucked. You are pretty much relying on inconsistent income, completely inconsistent income, and you're living in fear. You're letting the money control you. Okay? So why do you need to make more money? Because you're greedy, because you need it. That sounds like two fucking branches that you need to, you know, identify and find a solution to. Why do you need more money? You got no bread. Perfect. What's the solution? Work, sell shit, make more. And guess what? You're not going to make it through trading, because this is the problem that we're having. We're taking too many trades because you want to make more money through trading, and that's not the avenue you need to be going through right now. You need to be focusing on learning how to trade. See? Okay? So, okay, why do I want to make more money? I'm broke as shit. Cool, get a job, okay? Why am I being greedy? Because everyone loves money. How do I stop being greedy? Actually have money. What does that lead to? Get a job. Perfect. That's our solution. Okay? What else could be something, a problem or an issue that people are having that pertains to psychology? People getting out of trades. Oh, I get out of trades before it hits stop loss or before it gets take profit because I get too in my head. What's the problem? We get out of trades too early. Why are we doing this? We're not confident in our analysis. Maybe we're confused. Okay? So that shows fear, right? What are the emotions that are playing into that? Fear, underconfidence, which is essentially fear. Okay, maybe confusion, lack of bias, and maybe just lack of knowledge. All 5 of those. Okay, so how can you fix fear? Why are you scared? Because you're probably dealing with real money, live money that you can't handle. You can't handle that lot size. Why are you scared of losing? Why are you cutting a trade before it hits take profit? Why are you cutting a trade before it hits stop loss if you actually know your risk? Right? If you actually know your risk, you wouldn't be doing that. Okay? Understand your risk. Solution 1. Maybe solution 2, you shouldn't even be trading on live because you don't know how to trade yet. Solution 2, you shouldn't even be putting any money at risk. Maybe you should go to demo. Perfect. Solve both those problems. Risk less or go to demo. Or don't even risk less and just go to demo. It's as easy as that. Why are you scared? Probably because you need the money for that trade to hit. Why do you need the money? You're broke. Get a job. Get a job, go to demo. See how easy it is to find solutions to your problems when you identify what the problem is, identify why we are, you know, doing this, why we are executing on these bad habits, and then say, okay, what emotions are leading me to, what emotions are driving me to these bad habits? And it's not us saying, this is my problem, how do I fix it? It's saying, this is my problem, this is the reason why, this is what's causing that reason why, how do I fix this stuff down here so it pyramids up? And by fixing this stuff down here, you eliminate the chances of these little emotions affecting other areas in your life as well. Fucking 5 birds, 1 stone. Okay, by killing emotions and by identifying where and when you act on these bad habits and on these bad emotions, you'll go real fucking far. Okay, so hopefully you guys have your 3 problems. If not, do this with all your fucking problems. Literally, like, keep this page empty in your notebook, right? My biggest problems with trading. And once you fix these problems, never do it again. There's a great quote. I don't know if Alex Hormozy said it, but I think he got the quote from someone else because he loves quoting people as well. But he pretty much said, if you have the best job in the world, right? If you make the most money that you could ever have, you live the best life, you have the best job that you have ever had in your entire life, and you make a big mistake and your boss comes in and says, you know what, like, I could fire you right now, but I'm not. I just have to make sure you will never make that mistake again. What are you going to do? You are going to make sure that damn well you are never going to make that mistake again. Same applies for trading. You need to understand that this is a $1 million job. You're not there yet, but you have to treat it like that. Would I, if I had fucking 10 mil in my trading account and I lose one trade and I know the exact problem for it, why wouldn't I want to solve that problem? That's a couple extra, $100,000. That's like a couple extra $1,000 that it could have made me, that, solving that problem has made me. And in the future, when I don't do those problems, when I don't have those problems to deal with, guess what? I'm winning those trades. I'm not losing. I'm not executing on bad habits. I'm not giving money away to the market for stupid reasons. Those mistakes, those problems, those issues are eliminated because I know where it stems from. And once you can identify where it stems from and cut it and stop it and find a solution from the root of the issue, you're like, it's literally like a plant. A lot of people say, okay, yeah, I trade too much, I overtrade, right? They try and solve this one. Oh yeah, I took 5 trades today, I just need to stop. It's hard to say, yes, I'm just going to stop. It's hard. It's because most people can't do that, right? It's really hard to say, I'm just gonna stop, because you can't. It's really hard to do that. But instead, why don't we say, I'm not gonna stop. I'm not going to, not do something. How about we take action and find a solution to the main issue, right? We're snipping at leaves up here when we could just take the base out, throw it out, right? Why wouldn't we want to solve this root issue that could potentially stem out, right? Fucking, it's growing down here, causing more issues and more problems. It's like a fungus, bro. Like, you're the fucking lawn, and the fungus has its whole network underneath. And the minute you start chopping up those nerves, chopping off those networks, chopping off those bad connections, those bad habits, your shit's gonna be glowing. Your shit's going to be gorgeous. Okay, and that's what we need to focus on. Okay, so literally dedicate this entire page to any problems that you have with trading and go through that thought process. What's my problem? Why is it a problem? Why am I doing this? And then what is leading me to do that? What emotions are causing me to act? And then when you find those emotions, that's when it's real easy. Why am I greedy? I have no money. Why am I greedy? I want more money. How can we make more money? How can we get money? Get a fucking job, sell some shit. Maybe you have designer clothes that, and if you're trying to, if you have greed or fear as an emotion, sell every piece of designer clothing you have. Because you clearly do not have enough money to be trading, which in turn means you definitely don't have enough money to be having that shit. And it's best if you sell it and wait until you can actually reward yourself and actually go buy 10 pieces instead of 1 piece that's going to break your bank. Think about it that way. Reward yourself when you actually get the work done. So sell that shit. Sell valuable shit. Because guess what? If you sell it right now, It's going to come all right back. It's going to come back. And guess what? The money that you get from selling that, it's putting you one step closer to being able to buy it right back. You need to understand that, okay? Let's identify our problems, identify the root of it, and kill it. All right, hopefully you guys learned something from this. I really think this is a very beneficial video that every single person should watch, because this is how I've done problem solving like my entire life. My football coach taught me this method, and it is yet to fail. He was a big role model for me. He really like set shit straight with, you know, like understanding who you are as a human, because you know, he would always say there are very bad people in this world, and they all act on the same emotions that me and you have, you know, but me and you just have self-control. Me and you don't act on those bad habits, don't act on those bad emotions. And it's true, same thing with trading, right? Me and you are no different. We have the same strategy. We're human, we have a fucking brain. We're a level playing field. What's the difference? You still act on these bad feelings, on these bad habits, bro. You would be stupid to say or to think that when I see myself floating in 20 grand profit, I'm not thinking, holy shit, I could just close this right now and buy my dad a Rolex. That's what I'm thinking. I'm thinking the same shit that you guys are. I'm thinking the same thing, but guess what? The difference between me and you, I don't act. I don't act because I know that's an emotion that I should not be playing off of. It's identifying the emotions when they come up, and actually noticing it and saying, nope, not today. Not today, right? And by finding solutions to those emotions, by finding solutions and solving those problems, it's wraps, bro. Because then those emotions will feel a lot less. Yeah, I get greedy. I get greedy all the time in the market. I get greedy every single time I trade, but do I act on it? Definitely not. Why? Because I have money and I know I can make money in these markets. Because I know, right? Yeah, I could close right here, but I have a take profit somewhere. I know I'll be able to close soon. And if I don't get to close and I lose money, cool, I'll make it back tomorrow because I know my skill. It's a solution. Okay, so hopefully you guys learned something from this. Hopefully you guys can start, you know, putting even like life problems, guys. What's the problem? Why are you doing it? Identify the emotions attached to it. Find solutions to those emotions. Simple fucking clockwork, guys. A lot of people have issues, you know, like doing their New Year's resolutions. Like, I want to do this. Why? Do it. What is stopping you? You're too comfortable. Get uncomfortable today. Do something productive. Do something good. Today was like a mix of like a homework inside of a video, so I guess no technical homework besides, you know, doing the stuff that we talked about in this video. But that being said, I appreciate you guys. I'll see you tomorrow for Fair Value Gaps Part 2. Peace out.
All right, this is gonna be the third video. Okay, we're back on the chart. I'm fucking happy about that. So that's gonna be day 16. The fuck was I doing? Alright, this is what I wanted to get into. So I wanted to watch this video and see what is a fair value gap. How can I, what the fuck is going on over here? How can I apply it in the trade, and how to set it up and use those three things: liquidity sweep, break of structure, and now this fair value gap that's 3, and put a trade in. So now I'm hyped. Last 2 videos I feel like were okay, good. Psychology, yeah, you need it. It's like he's really big on that, which I understand. But this is what I'm looking for. This video is what I'm going to count for today. So yeah, it was 3 videos in one. This is going to be the third one. But this is what needs to happen.
What is good, guys? Welcome. I'm sorry for the late video. Hopefully some of you guys are still awake. If not, I'm sorry. This is coming to you guys late. I have had 0 hours of sleep. I'm in Miami, obviously, and I'm still going to keep my promise of uploading a video every single day. I wish I could take a nap right now, but I'm not going to let myself do that because you guys have shit to learn, and that's what we're here for. So with that being said, let's just jump right on into it, okay? I believe today, hold on, actually, I don't want to get this wrong. I believe today is Fair Value Gaps Part 2. Let me double check the YouTube channel for a second. Yes, let's go. Okay, today is Fair Value Gaps Part 2. Okay, so today we're going to be talking about how we can identify them, and then also, like showing how you could potentially take a trade, or really today's just going to be identifying, and then day 3 is going to be how you can take trades and how you can put it together with liquidity sweep, break of structure, bing bong boom, all that stuff. Today is literally just going to be identifying them, understanding what they're used for, doing a little bit recap of that. Should be relatively quick, should be relatively easy. So with that being said, let's jump right into it. So we'll first do a quick little summary. Also, please forgive me if I, mess up. Like I've gone almost like 48 hours with no sleep. And obviously my voice is gone, and I've been doing a bunch of stuff. So if I mess up, bear with me. Anyways, what was it? Yeah, let's jump right into it. Okay, so first we'll do a quick little recap. What are fair value gaps? What are liquidity voids? What are imbalances? It's literally where there is a lack of liquidity, meaning there are no resting orders in the opposite direction of wherever price wants to go. So with that being said, right, if price comes down into that liquidity void, into that imbalance, into that fair value gap where there are no resisting orders, and then we can place more orders, boom, market is going to move and market is going to react. Why? Because there was a lack of liquidity within that area. That gives us the opportunity and the ability to, move the market. I can't, dude, I'm sorry. Messing up, but we're focused. All right, so with that being said, right, we understand that, okay, fair value gaps are essentially a liquidity void within the market where market will probably draw to and then react off of, and that's essentially what it is. It's literally just an imbalance, a liquidity void. Price draws back down into that. Why? Because there's no resting sell orders, there's no resting buy orders in the opposite direction of wherever price is trending, which in turn makes fair value gaps a retracement tool. Essentially, it helps you find trades off of retracements. And as we start getting deeper into this, we'll start explaining, all that shit about how you can use these. But something to note, fair value gaps are not reversals. Fair value gaps are not used for reversals. So if we see market trending higher and higher, if we see market going higher, right, breaking higher highs and higher lows, if we see market doing that, we are looking for fair value gap. We are looking for bullish fair value gaps. Okay, and we'll talk about where to find them, but in this case, right, we're bullish. So what are we looking for? We're not looking for bearish fair value gaps to turn price around. We're looking for retracements into these bullish fair value gaps for reactions. Okay, and continuations. That's essentially what fair value gaps and equilibrium are used for. It's continuations and retracements. Okay, so with that being said, now let's talk about how we can identify them. Fair value gaps are essentially, or imbalances are essentially, a 3-candle pattern. The first candle, okay, which looks like this, schmink, okay, and then the second candle, which is the candle that creates the imbalance, essentially, will be like super full like this, and then the third candle, which looks a little something like this, okay, and a fair value gap looks something like this. Okay, so what is the area of fair value? What is the area that has not been filled, right? That didn't have any, resistance, resting orders, right? We see this, right? And we'll show examples of this on the chart, but we see this candle, right? Massive up candle, right? And no resistance in between. And how do we know there's no resistance? Through the wicks, okay? So this is a 3-candle pattern, and essentially we find the liquidity void, we find the area and price range of fair value by measuring it off of for bullish fair value gaps, it's from the top of the first candle's wick to the bottom of the third candle's wick, and then you draw your box or whatever, your Gann box, your rectangle. You draw it, right, just like that. Boom, from here up to there, wait for price to fill, wait for price to react. So now my shitty ass drawings can get removed and we can actually see this happening on the charts and, like actually see what it looks like. So this is a perfect example. Okay, we get a break of structure. We're confirmed bullish now. Okay, we know that we're bullish. Okay, what is this? We have a massive candle with no, right? Look, this, no wicks filling this. So what does that make this? A fair value gap, right? There is a liquidity void. What does price do?
I'm gonna take pictures of this shit because I'll get lost. I'll be looking back for it later. And I'm gonna get pissed off.
Draw into it, chop, 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 break structure, rally. Okay, perfect example of fair value gap getting used. Boom.
Here's another. Is this not a fair value gap as well right here? But this wick is a little bit bigger. 1, 2, 3. So look, what about this one here? Is that not a fair value gap? Because what happened here? So it rallied up. Here's our fair value gap. Once it went down into it, boom, we're in the fair value gap, right? And it starts coming up. Break structure right here. Do we hop in right here?
Bullish. Right? Bullish fair value gap, rally. Okay, it's actually very easy to spot these in the market. You literally just look for, areas that do not have wicks covering it. So for this one, for example, sorry. This one, for example, we have, boom, right? From a bearish fair value gap, we have it from the bottom of the first candle's wicks to the top of the third candle's wick, like this, right? We can see, boom, bottom of this candle's wick to the top. This candle's wick, we see price come in, chop, 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 fill, drop. Okay, right? How do we know it's going to be bearish? We had a break of structure right here, confirming a bearish bias. What were you looking for? Or we're looking for retracements. Okay, we retrace on into this fair value gap. We continue lower. This is as easy as it gets. This should be one of the easiest concepts to use. However, because it is such a freaking easy concept to use, you have to understand that it isn't necessarily as valuable as you may think. Okay, so you can find these literally everywhere on charts, right? We could, fair value gap right here. We have fair value gap right here. We have fair value gap right here, right? And the issue that I have with this is when people execute purely off of just the fair value gap getting hit.
That's another thing. So now this is the third step. If we see liquidity sweep and we see break of structure and then we see the fair value gap, that's 3 points. You need to have minimum 3 points, 3 indicators to make a trade. So this is the third one, so now we could actually execute trade, because in the beginning I was executing trades just solely based off of break of structure. Then I implemented the liquidity sweep, or tried to, into it, and then this is the missing piece of the puzzle. So I'm excited about this.
And without a reaction, wait for a reaction, or scale down to a lower time frame, see a break of structure, see a change in market structure shift, or just a reaction like with a bullish candle or a bearish candle, whatever direction you're trying to see it go, and let that be your confirmation to enter. Okay, be very patient with these because they're all over the chart, and it's really easy to get kind of caught up in them and be like, oh, they're fair value gap here, fair value gap here. All these are going to work, and it's like, no, they aren't. Okay, not all of them are going to work, and that's why we have to wait for confirmation. That's why we have to wait to see if there's a reaction. That's why we wait to see on a smaller time frame if there's a break of structure. Make sense? Cool. I'm trying to think what else we have. I mean, today's homework, you are going to be going on whatever pair you choose, right? Whatever one pair that you're going to be trading on. And you are going to be identifying 10 fair value gaps within the market, and then, creating kind of like a hypothetical way that you would trade it, right? So like this, we see that break of structure to the downside. We know that price is falling. Okay, yeah, we have this fair value gap within here. Right, we have this fair value gap. We see price fill, close bearish right here. Okay, perfect. Now we can enter, stop above the previous high, target previous lows, right? Simple as that. Okay. We know that price is falling. Okay, yeah, we have this fair value gap within here. Right, we have this fair value gap. We see price fill, close bearish right here. Okay, perfect. Now we can enter, stop above the previous high, target previous lows, right? Simple as that. But again, we're not even at the point of previous lows, right? Simple as that. But again, we're not even at the point of being able to execute yet. We're still putting the pieces together. So that's really all fair value gaps are, and it's a 3-candle pattern. The first candle, okay, the first candle's wicks do not match or do not fill the second candle's body, and the first and third candle's wicks do not fill the second candle's body. So let's say this is the body. If we have wick from this candle and then wick from this candle, let's just say these are candlesticks. Okay, there we go. Boom. This is not a fair value gap. Why? Because price already came within here. It filled the liquidity void. Right? There's nothing else to do in here. And these wicks show hindering orders. These wicks show resting orders. Pretty much proving that, pretty much proving that, okay, there's no lack of liquidity here. It's been filled. So that's something that I want you guys to do as well. Be able to know where there's no fair value gap. Is this a fair value gap? Fuck no. Why? Because we're looking for a bullish fair value gap. We take it from.
Is this a fair value gap? Fuck no.
The top wick of the first candle, okay, to the bottom wick of the third candle in terms of a bullish order block. Look, bullish fair value gap. Look, this is not a fair value gap because we took it from the high of this wick down to the low of this wick, and nope, is not going to work. Definitely not going to work. Okay, so with that being said, understand and know the difference between ones that are not real. You should easily be able to identify these, right? We just showed it perfectly. Remember, it's a 3 candles pattern. We're using the wicks of the first candle along with the third candle, and we're using the second candle to pretty much show the imbalance, right? We have this candle. This is a perfect example. This candle is candle number 1. We take it from the bottom wick in terms of
Same one downtrend as well. So I want to get that in my notes. So I know. This is good.
bearish fair value gap. We take it from the bottom wick, right, which is right here, down to the third candle's top wick, which is right here. Okay, the second candle is the imbalance. Okay, perfect. We see price rally up on in there. Scale down to the lower time frame. Boom, you see break of structure, Young Money Militia. That's how we can execute. Okay, so with that being said, scale down to the lower time frame. Boom, you see break of structure, Young Money Militia. That's how we can execute. Okay, so with that being said, get your homework done. Make sure you identify these, and then also be able to identify the ones that are not even real, so you can actually get comfortable with understanding, you know, which ones are right and which ones are wrong. And yeah, that's pretty much it. I'll see you guys tomorrow for a nice little psychology Zoom. I'm really excited for it. Peace. Peace out. Also, hopefully I can get some good night's sleep before the next video that goes up tomorrow. Okay.
Okay, he's on a day chart, so let's look at a couple different time frames when we're looking. Day and week chart as well.
With that being said, you can execute. Okay. So with that being said, get your homework done. Make sure you identify these, and then also be able to identify the ones that are not even real, so you can actually get comfortable with understanding, you know, which ones are right and which ones are wrong. And yeah, that's pretty much it. I'll see you guys tomorrow for a nice little psychology Zoom. I'm really excited for it. Peace out. Also, hopefully I can get some good night's sleep before the next video that goes up tomorrow. Okay. Bye.
Oh shit. Let's see. Let's see if we can find some fair value gaps. That is going to be the... That is going to be the objective for today. First of all, let me see if this shit's fucked up, for one, because last time I inputted this 100,000 times. Let's see, that's good. That's good. And that is good, I think. 1 to 9, yeah, okay. Shut this shit off. And we are going to look and see if we can find fair value gaps. So, let's find some. 3 candle structure to the upper downside. Here's a fair value gap right here. Boom. How the fuck do I make a box? We're gonna learn how to make a box. That's what we're gonna do first.
All of them are going to work, and that's why we all the time. Right, we fall trade it, right? So okay, yeah, we have to see that break.
That's how you make a box. That's not it. You ever traded through prop firms? Nah, I'm super new into this, bro. Super green. Like, I'm just trying to learn how to trade, period. You know? I haven't traded with nothing. GAN box? Fuck, did I make a box? There's so many different tools. Why don't I have a stupid ass box? Why can I not make a box? GAN box. Fib retracement. Fifth channel. GAN square. Holy fuck. Alright, I don't understand. How the fuck do I make a box? Info line. Pitchfork. Why is this shit like right there?
Structure the downside. We know that price is falling. Okay, yeah, we have this fair value gap within here.
He makes a square. Price range. Favorites. Let's see, how long is it gonna take me to find a fucking box? Let's go with the... Alright, we're just gonna use this shit, I guess. I don't know what the fuck this is, but that's what we're gonna use. So, what was that? Here's my fair value gap right here. That's fair value gap, right? So we're on the 4 hour. I'm gonna look in that pictures that I took. See, this is where it's good. So it seems like what he was looking at is, here's a fair value gap. It dipped into it. We're looking for breakup structure as well. So it ripped into it, right? Here's an up candle. Another candle. Here's a breakup structure. It continued to crash down. Let's roll up into the... He's on the day and week chart looking for fair value gap. So here's another one. Actually, this is a perfect example of one that is not a fair value gap. So we found one. Here's examples of none. Here's another one. Okay, so let's see, what about an uptrend? Here's one, right? That one we might have just looked at. What the fuck happened here? Fair value gap. Here's one. Here's a decent example of one. Right? It's kind of stale though. So here's a fair value gap. What happened here? So this is a bearish fair value gap. Right? Bearish, got inside, went lower. I'm guessing. So I'm gonna add that as my second one. What other fair value gaps we got here? Here's a fat fair value gap. Okay, so this is a bearish, right? Bullish. Bullish, that was a bearish. Rips up, here's our fair value gap, right? We found one. Now it's downtrending in. Starts ripping an uptrend. Boom. Buy in here. Take it to the top. And how are we gonna know to put a stop loss up there? Target. What are we targeting? I don't know what we're targeting. So far we're just taking trades, right? And this is just entry level shit. Here's another fair value gap. I don't know if I mark that. I'm gonna mark that as my third one. Close that shit. Here's another one right here. This one, no. Oh, is it though? Is it though? This I'm gonna say it's not because of the wick. We're looking for this, right? Let me look at some of the examples. They got little wicks. Yeah, they can have wicks. As far as the candle itself, I mean, they're not mega huge wicks. Yeah, they are. Some of them are. I would say, yeah, this could be a fair value gap, right? Here's one. Boom. I'm just thinking of like, seeing this shit come down, coming up, boom, fair value gap. Here's arguably maybe even another fair value gap. Is there a fair value gap perception going on here? So, rips up, touching into it. Boom, here's our first one. Closed below. Ripped up, boom. Buy in, right? Broke structure inside. To the upside and it just rallies up. What are we targeting? Previous highs probably? What the fuck is this line? Get this shit out of here. we're gonna do array. So we're targeting previous highs. So let's say we got in here, right? What was that one thing I had? I just got a long position. Look. So let's say we closed above this, so we probably bought in right here, right at market open, right? Let's see, target. I'm gonna try to do like a. Let's target previous high, and our stop loss could be whatever. So if we get in here, taking it to the upside, targeting these previous highs, boom. We got it, right? I'm gonna count that as another example. So we could cash out here. I would say that's a pretty good setup. I think that's probably the most solid setup I've came up with yet. So I'm counting that as one as well. We just saw. Here's the fair value gap to the downside. Right. Here got in, closed. It's not really a strong downtrend though. I mean here I guess it closed below, right? There's it's not really too much of a fair value gap, I would say. Here's one to the upside, but I don't see really shit going on. Yeah, where would we project this? This shit's fucking. We're still waiting for that shit to happen 10 years later. You know? Where else we seeing these fair value gaps? It's a 3 candle. Let's see if he's seeing any. No, it's boom, boom, boom. Ah, yeah, he's waiting into him. Doesn't really have to be the first 3. Like this one, for example, right here. It's easy to see now. Obviously, we're seeing in the future. So everybody's gonna be a pro trader in the future, right? Here's our fair value gap. Let's see, when is he targeting? When it's an upside. He's targeting a rally up. That's what makes it a bullish and a bearish. As long as it like touches inside. So this is a bearish, bullish fair value gap. And this one closing inside, right? But this one closed inside. Then it ripped up. What if we wait for it to close in here? And we are targeting previous highs, right? Dude, I might smack the fuck out of this stop loss though. Look at that. I count that as a fair value gap. What if we're looking at an uptrend? Okay. Boom, 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 boom. Here's an uptrend. Higher high, higher low, higher low, higher high, higher low. On a downtrend. So here's lower high, lower low, lower. I want to find a downtrend. Here's a lower high, lower low. Here's a strong uptrend. Higher high, higher low, higher high, higher low, higher high, higher low. Right? Is there any fair value gaps? Right away I kind of see this one. This one's not really like a good one right here. So that's a fucking junk one. Here's a downtrend. Boom. Higher high, high, low, lower high, lower low, lower high. Oh, it's kind of weird. Here's a peak, lower high, fuck. Higher high, higher low, higher high, higher low, higher high. So we're ripping up, right? Boom, right here. Here's a fair value gap. Right? We're looking for it to rip to the upside. Closes in it, right? Boom, this one's in. Alright, we are buying in as soon as that closes in. Okay. Let's say we bought in right at market open. What are we targeting? Previous highs, right? There's no previous highs. So, we would make it off this basic ass chart. It's kind of a fucking one. Here's a fair value gap. Ripping up. Okay. This one arguably closed into it. So let's say we take it on this trade. Okay. What are we targeting? Previous lows. Or we could have targeted this low. Hey, you know, you might dip into this one and might hit that one. With a stop loss, it's gonna be 5% down. To go up what, fucking 2%? you know. That could work. I'm gonna count that as one. How about this downtrend? Boom, look at this fucking shit. Dumps like a motherfucker. It's a fair value gap. Right? Boom, close inside. What are we guessing? What do we think is gonna happen? So on the downtrend, looking for it to go back down, right? Popped up in. I guess I'm gonna count that as one. Well, let's say we closed in on this one. Just fucking closed in on this shit. Let's say we pop up here. We're targeting previous highs. Might tap into the low. Look at what it did. Our target is a previous high. So 4%. Boom. Doesn't hit our stop loss. Boom. Smacks that. We get paid. Higher high. Higher low. Higher high. Higher low. Higher high. Whoa, what is going on here? See, we're watching this shit unfold. That's not a fair value gap. That's a bad example. We'll mark that. What do we have here? Fair value gap, right? Boom, closes right into it. What are we targeting? Previous highs. Previous lows. Actually would have smacked it right here. Boom. Take profit. What about our stop loss? It would have cracked it right here. Boom. Fuck. That's 11%. It's 10% stop loss for a fucking 7% trade. I mean, it didn't. Oh, this one closed. I'd say that's a pretty valid one. I mean, it's easier to say now. Get this downtrend. Boom. Whoa. Some crazy shit going on over here. So here's a lower low, lower high, lower low, lower high. I don't see any fair value gaps though. Okay, here's a low. Here's a high. Here's a higher low, higher high, higher low, higher high, higher low. Okay, we got some decent movement up here. There's no here's a mini fair value. This is a really mini fair value. No, I don't think that's gonna work. Lower low, lower high, lower low, lower high. Oh, popped up. Fair value gap on the downside, bearish. It's going down, boom, closed right into it. Right here, right? This is short. Fuck, all my alarms are going off when I was supposed to be waking up. I was supposed to be starting this video right now. Right about this time. Well, I couldn't go to sleep, so this is what we're doing. Anyway, what we're doing. Short position. Went in, just closed, open, closed. Boom, we're taking our short position right here. What are we targeting? Previous lows. Sure, we could target a previous low. I don't know what we'd be targeting right here. Could be targeting previous highs as well. Right. Here's our fair value gap. Entered here. Stop loss might have to be 7%. What are we targeting since we entered in here? I'm gonna target right fucking here. Right? That's gonna be what? Target previous lows. Since we did enter the trade here, we got enter here. Okay, right? Take profit. Not so bad. Boom. Take profit. Yeah, we could have got, you know, that's just being greedy. So that's not gonna work. That's a gamble, but that will work. As far as like my setup, how I was looking at it, we need one more. We need one more. One more. What do we have here? Higher low. I'm ripping on an uptrend. Touched. Since we're on an uptrend, we are going to look for. What the fuck is it? We'll look for a long position. Alright, closed into here. Alright, a little candle wick, so let's do this. Boom. 2%. That was our 10th, sorry, fair value gap that we saw. So use what is it called? Liquidity sweep. Fair value gap. Break of structure. Break of structure, liquidity sweep, fair value gap. Those are the three. Alright, so I think I'm gonna end it here. I'm gonna try to wake up. I'm gonna go to sleep, and I'm gonna try to wake up before market opens. Let's see if we can get some setups. So what would be a good time? If market opens at 8:30, I need to be up at 7 so I can eat. I'll be up at 7. So I can eat, get ready for market open, get on like an hour before, so like 7:30, be on here. And 7:30 ideally be on here, see if we could call a setup. We got a couple different things we could look at, like as far as the NASDAQ. Let's see, what else could we do? Let's try to look for like quick setup real quick. We will go on, what the fuck were we just on? I'm in Q. This is what my boy is recommending to me. The 1 second chart, bro. Why is this shit all fucking blue? Alright, here's a London session. Let's try to look at a, I don't know why the fuck this is blue. London, Tokyo, New York. Let's see London. I think we were targeting fucking Ray. So this high, this low. So here's London session. This is what we'll be looking at. Simulation for today, Monday. Here's London. This is London's high, London's low. So what are we looking at? What are we looking for? Is a liquidity sweep. Fuck off. Here's a liquidity sweep, right? Liquidity sweep. What are we looking for in a liquidity sweep? That is the question. Because I have break of structure notes and I have the. I'm gonna select. Fuck. Boom, 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 boom. Where's my liquidity sweep notes? Boom, 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 boom. Liquidity sweep, huh? What do I see here? A liquidity sweep. What does that typically mean? Is it gonna dump? Well, it just smacked the London sessions low, right? Break of structure to the upside. Okay, we have a break of structure. What else do we have? Okay. Let us look for a fair value gap. Where is our fair value gap? Okay. This is kind of a junk one. We can also look for downside fair value gap. Not really seeing much going on over here. Is this what fucking day is this? Friday. This could be a fair value gap, can it not? I don't really see much going on over here though. Ain't shit really going on Friday. Not on Monday. Okay, so scratch that. It's Friday. I don't know if Fridays are that good. This needs to fuck off. Let's try to look at a Monday simulation of today, right? Wednesday, Tuesday, Monday. Just throw a target in. London sesh. High and low. Okay. So, knowing what we know, what do we have here? Boom, boom, boom. Okay, downtrend. Oh shit. Oh my god, it's fuck ass gone wheel. Give me that gone box, motherfucker. What do we have here? We just hit the London session high, we smoked it, okay? Fair value gap right here. What is that? Fair motherfucking value gap, okay? Boom, closes into it. Alright, I know it just smacked it. I am getting out my motherfucking short position. Okay? We are going to buy in right here. What are we targeting? Okay, we could target previous lows. We can target previous highs. .33%. Or we could stay in it. What if we stayed in it all day? Damn, it didn't fucking move that much at all, did it? That's 10, I mean, that's that. It was a pretty stale day. Unless you look at it here, and it's fucking not much movement though, to be honest. That's actually a fuckload of movement. The fuck is this? What is this? Who uses this shit? So it looks like it fucking tanked. Monday, Tuesday ripped, Wednesday ripped, Thursday fucking took a shit. Here's London. Fair value gap. Friday was pretty stale. And we are here now. So I'm gonna leave this shit open here. We're gonna try to do M&Q. And what else? NASDAQ. The S&P 500 as well. They all kind of moved the same. What's going on here? Oh. I'll pretty much move the same. I'm gonna try to see what I could do on M&Q though. Let's see what we could do here. So I'll be back. Liquidity sweep. I'll be back. We'll try to figure some shit out. It just hit me that I'm tired now. Fucking 5 hours later, because I woke up at midnight. And I'll catch you guys when market opens.